What's up, YouTube? Listen, man, I'm tapping in, guys. We got another day in the books, which means we had another chance to get back in our bag and do what we do, guys. So with that being said, just want to come out and say major salute to those of you that did your thing on a day. Those of you that still managed to make moves and navigate this market in spite of, all right? Listen, man, I got a jam-packed video, so I want to continue to encourage you guys to continue to dominate in spite of everything that's going on in this market, okay? Listen, guys, if you can learn to win consistently in this bear market, guys, it's a cupcake, or otherwise known as a layup, when you have a bull market, okay? So keep that in mind, keep testing the waters, but also make sure you minimize risk. If you don't see a setup you like, it's okay to sit it out, okay? It's okay to wait, watch, and do me a favor, take mental reps each and every day. You should be doing something along your journey, okay? Don't just throw in the towel altogether. Even if you don't make all the plays with us, take mental reps, watch the plays that we talk about, see what they do, see how they perform, see what you would have did had you made the trade. And it's okay to paper trade as well. Get you a little sim account and go in there and make some moves and mess around a little bit, okay? With that being said, guys, listen, man, the market, I'm gonna start with Apple real quick. More or less so, two things. One being the fact that it barcoded, the other being the fact that I want to stick to my script, stick to my principles as an investor. Okay, I talked to you guys about the fact that under 140, in my estimation, you start to nibble on something like Apple, okay? You start to dollar cost average. You start to buy a little in efforts to accumulate a massive amount of shares over time, because I like 140, but I love 120, okay? Make sure y'all make a note of that. Chris says he likes Apple more at 120 or below, but at 140 or below, we start to get it in. And look at where it's sitting at today, guys. So under 135, you start picking up the pace a little bit. You might come out with 250, boom, you might drop 350 in there, okay, at this level. And then you slowly but surely try to accumulate more and more shares, okay, as you run your race and you build out your play. Now, I'm just giving you an example of Apple because that's one of our players on our 100K challenge, all right? But this year, 2022, guys, is going to be a down year in terms of overall, okay? Now, that don't mean you can't have an up year in terms of where you buy and then where you exit in terms of locking in profits as these stocks have, these various bear market rallies, and if you get in and get out, okay? But overall, the year itself will be down. That got nothing to do with us doing our thing around here. You see how we give it up every day in terms of crushing options and knocking them out the park. But what I'm trying to get you guys to see, it's a two-pronged approach to building wealth. You want to have your stocks and you want to have your options, okay? And the stocks are going to go down. I'm gonna talk to y'all more about that in our word of the day today with interest rate hikes, okay? But with the stocks going down for this year, I'm talking about tech stocks in particular, okay? That's a chance for you to, these are golden years to buy them. You say, man, I bought heavy in 2022, but say it's the year 2024 and stocks are up 50, 60, 70, 80, 100%, okay? It'll be the work you did in 2022, okay? So for me, just sticking to my principles. I always nibble on Apple under 140, and I go extremely heavy, okay, at 120 or below. So when you guys see my average cost, or if I show you guys making $100,000 this month or that month, guys, all it was when it hit my principled approach, my numbers that I already have done the research on, already have set money to aside for, to say, if it ever come to this price, boom, we going all in. That's all this is. Right now, I'm just telling you guys about where we begin to nibble, aka dollar cost average at, because it's at that first initial level, which is 140 or below, all right? But the next thing I want to talk to you guys about, sticking with Apple, okay, look at how it's barcoding. Remember I taught you guys about barcoding in our word of the day segment? Look at how it's barcoding, and look at how, well, depending on what stage you're at on your journey, some of us see money, but some of us also can just see how difficult this could be to trade, all right? But with that being said, I don't like on a larger chart or on a larger scale. I don't like the barcoding segment of a stock. I wanted to make a decision. I wanted to break out either to upside or go to the downside. I'm okay making money either way in a play. I already got the stock for a long term, so I don't care what it do to the downside, if that makes sense. But barcoding was something that you guys should have seen on today in several plays. I'm just using Apple for this example. Okay, that lets me know we got a lot of uncertainty in the market. The market didn't know what it wanted to do. It didn't know which way it wanted to go. Therefore, it didn't do nothing but trade in a range. That's called a trading channel, and it went sideways or it consolidated, okay? And with that being said, guys, that leads me to my next point, okay? Tomorrow, we got Fed Chair Jerome Powell. He doing his monthly little meeting, okay, and it'll be around Wednesday at 2 or 2:30. Okay, now historically, guys, you have seen the volatility that comes with these Fed chair meetings, okay, but listen to this. Last month he promised 50 basis points for this month, okay. Last week he was talking really good, and no, boom, we going with 50 basis points, but now that while the market crashed last week Thursday, and while it crashed all these days since then, Thursday, Friday, then Monday, that happened because he told everybody 50 basis points back last month. Now he's trying to put it out in the atmosphere. He tried to text a couple buddies and say we might be looking at 75 basis points. Now remember, we ain't ever talked about 75 basis points. He ain't say that. So now he's saying something different. The market doesn't like uncertainty. That's why you seen it crash last Thursday, you seen it crash last Friday, and you seen it crash on Monday. Okay, so I'm here to tell you guys this. You gotta prepare for the best but expect the worst, okay? Listen to this. You may see a 75 basis point hike on tomorrow, but you may also see 100 basis point. Okay, that would be him going in his bag and pulling something out the hat that none of us seen coming, okay, because it's being kicked around by his peers, but he hasn't let that out in his meetings, okay. But there's a credibility issue on the line. There's a lot of things at stake in terms of how he's going to look one way or the other. You're either going to show a sign of strength and look strong, or you're going to look like, man, you letting this inflation stuff whoop on your little butt a little bit, okay. So with that being said, watch very closely what he chooses to do, but more importantly, what number he chooses to go with, okay? And then you will see the market respond accordingly, okay? So expect some volatility tomorrow, and that's where I want you guys next to be ready to go hunting, okay? Listen, guys, we're gonna get more and more clarity with these things along the way, but it's gonna be a bumpy ride. I can't hold you up. I can't act like no stuff about to turn around and go to the moon or nothing like that. It's gonna be bumpy. It's gonna be choppy, okay? So I need you to be ready to go hunting with me. So we gotta be locked, loaded, and ready to go, and taking advantage of plays that will give us opportunity in either direction. All right, so that's where options come in at, and that's why lateral to that we build these stocks like an Apple. When it come to 130, 125, 120, you want to be buying and buy even heavier the lower it go. That's all you're gonna see your boy doing, and I'm gonna live to tell you guys about it if I do, Lord willing. Like, man, you guys remember 2022? Look at these moves I made, and look at how they paid off for me, okay? And I expect the same out of you guys, because I'm expecting to see you guys all reach millionaire status, as well as lead the corporate plantation if you choose to, okay? Listen, guys, up next we got our word of the day, and our word of the day is rate hikes. Now listen, guys, I'm gonna put a little bit of spin on this rate hike business, so I want you to know why it's important. So you should know by now, if you rock with me, I'm more of a tech investor / long-term investor, and then I do my thing with the options, okay? But when you have rate hikes, it's not good for tech stocks, okay? So those two things don't go together, okay? A rate hike, so if he do 75 basis points tomorrow, he's saying he's throwing a finger to Tesla, Apple, and any other tech stock, Microsoft. So you will see the higher he go with the rate hikes, the lower those stocks will go. That's why I keep telling you guys, man, Apple gonna come to 120 because he has way more work to do to get inflation under control. None of that stuff is good for tech stocks, the stocks that we talk about on this channel. Nevertheless, that's why I often talk about you having to be nimble and flexible and looking to pivot. You got to know when you're going in build mode like we are now and where you're going to home run season. Okay, so if he's, it's a one-man show right now, guys. If Jerome Powell, if he's knocking tech stocks down with his actions, then you got to say which ones are the best in class of these, because I want to use these rate hikes, okay, while it's suppressing my stocks or beating my stocks down. I want to be able to get and accumulate the ones I like. And that's why I say you got to be meticulous. You can't get everything, guys, because everything gonna come down. So you got to know if it's Apple, if it's Tesla, if it's Square, if it's PayPal, if it's Fake, whatever it is gonna be for you, you got to make up your mind which one you're gonna focus on and load up on, okay? And then you live with your decision. You make sure you got conviction in your decision. You make sure you're okay with what you decide, because you're the CEO of your portfolio and you run the ship, okay? So with that being said, rate hikes are not good for tech stocks. So this is why us investors say stuff like 2022 may be a bad year. It's gonna be a bad year for tech, okay? And eventually that energy stuff that's popping off, which is good, but that's gonna eventually come down. You know what I'm saying, too. It was good for those that may have been in energy this whole time for this whole run up, but that's going to come down too. Everything that goes up must come down, and the market can't turn around until everything come down. So at some point we got to start wanting energy to come down, okay, so that we can get everything down, and only when everything is down can we reverse course. So the word of the day was rate hikes, but I more or less want to talk about what it do and what sector does it hurt the most, and that's going to be your tech stock. So don't look for something major. That's why I say when you see those pops, do me a favor and lock in some of that profit, because it's going to come right back down. In rate hike seasons and cycles, moves that tech make are not sustainable. So you got to know that. You can't think, oh, this gonna be the one that's gonna go back up. No, until we done making these hikes, the play not gonna go up and up. Okay, I'll be sure to let you guys know when we're clear for takeoff. But right now, those plays are gonna go down. That's why if you buy at 120 and it pop back to 135, boom, you might need to lock in profit on Apple if it makes a move like that, versus what we would do in different conditions in a different environment. Okay, those just some more nuggets I wanted to drop on you guys. Hopefully I simplified it enough and explained it in layman's terms enough for that made sense for you guys. Rate hikes means tech stocks go down, okay? So with that being said, listen guys, when they sleep we eat, when they panic we pounce. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.